Thank you for joining us. I'm Juan, founder and lead trader of Prosperitrade, where we like to talk about everything investing and trading. We talk about stocks, day trading, option trading, swing trading, and anything investing related. Today we want to do our due diligence on a stock called Senseonics, which we believe has the potential of being a disruptive type business. So let's go ahead and take a deep dive into ticker symbol SENS, Senseonics. Before we begin, please go over our disclaimer. Prosperitrade, we are not investment advisors. All our videos and websites and products are purely for education. So Senseonics. Senseonics is a medical technology company that develops and manufactures a unique implantable CGM device. So what is CGM? Continuous glucose monitoring. It's basically a device that goes into your interstitial spaces. It reads your blood and it calculates your glucose level. So in the past, diabetics usually have to stick themselves with a prick, take that blood, and they get the number through some sort of device and adjust their insulin accordingly or whatever type of diabetic they are. But this one, you just implant it, you can look on your phone, and it just continuously monitors. So the CGM system measures glucose level in people with diabetes for a period up to 90 days and 180 days. The EverSense is 90 days, and this is what's used in the this is what they have in the United States right now. It's FDA approved since 2018. The EverSense XL is already approved in Europe, and this will last 180 days without having to replace the device, and we're waiting for FDA approval. And I actually spoke to an investor relations person in Senseonics, and I'll go over kind of the questions I asked him and the answers that he gave me. A CGM system provides glucose measurement regularly and gives the user an alarm when sugar levels drop too low or go too high. It can be used in connection with an insulin pump to automatically deliver insulin when needed. So one of their major competitors, Dexcom, currently has this. They've partnered with a company, so if the patient or the customer needs insulin, the insulin will automatically be delivered. EverSense technology is unique as its long-term CGM system can last up to 180 days versus 7 to 14 days, which is Dexcom, which is about 10 days. And it is the only one implantable under the skin and works with a removable transmitter. So this is actually a good thing, but it's during COVID, it was a bad thing for them because it's considered a simple procedure. Most of those simple procedures were not done during COVID. So on March 4th, they actually fell short in earnings. And I believe it was because of COVID. And also when they first initiated actually their device here before they partnered up, and we'll go over this, a lot of providers were hesitant to use this device. So they've done a few things to overcome this, and we'll discuss those things. So this is what I mentioned. In 2020, Senseonics tried to commercialize EverSense in the United States. With COVID, it couldn't get physicians to perform the implant procedure, and they were forced to pay $48.5 million repayment to one of its lenders. So what did they do? This actually almost led them to go bankrupt, and they were forced to join collaborate with a company called Ascensia. So joining with Ascensia actually is a great move for Senseonics. Ascensia, they can be found in 125 countries. So they have already 10 million customers, which is potential revenue. Ascensia has been in business for over 70 years and considered the leader of blood glucose monitoring. And they've dedicated to invest $250,000 over the next 5 years to commercialize EverSense. And not only that, but this is a $1 billion company. They've made over $1 billion in sales and they're investing in this small Senseonic company, which isn't profitable yet, which should tell you a lot that they do have faith in their product. So what's the market? Who's the competition? So the competition, three major competitors would be Dexcom, Abbott, and Medtronic. So this is a $5 billion plus market, growing to about 35%, according to Senseonic Management, and it's dominated by the three companies that we just listed. So Dexcom is the major company when it comes to this. When I called the investor relationship, I asked them about a few things, and one of the things I asked them about is how are you going to beat the competition? Basically, these Dexcom is a big company, trading at over $400 something plus per share. So they said basically that Dexcom has to be adjusted every 10 days, switched out every 10 days. Their product is every 90 days, and potentially the pending FDA approval, it'll be 180 days. Abbott, they said that it's not fully continuous glucose monitoring, and it also has to be changed out every 10 days. And they said Medtronic basically has a lot of accuracy issues according to the consumers. I also asked about their FDA approval for the 180 days, and they told me that the FDA will take a look April 15th, start investigating, and it takes 6 months from there. So April 15th, the FDA starts doing their investigation, starts looking into the product, the results, and there's a lot of positivity and pretty confident because they've been using it in Europe already. So hopefully, they give a 6-month timeline, which would come out sometime October, but it can be any time before that. If the FDA approve it any time before that. And this was a pushback. Actually, they were supposed to get this earlier, but they said because of vaccinations, because of COVID, they had to push the date back to April 15th when they start looking into this. So that's a potential catalyst where sometime can be anywhere from August to October, they get the FDA approval for the 180-day CGM machine. And I also asked about possibly partnering up with a company that would administer the insulin. And they said that that's something they're looking into, and they've looked into what they call beta bionics. But they said that the market for people that actually need the insulin is only about 10%, so it's not the highest priority. And they've looked into maybe insulin pens or some other ways of administering the insulin. But it is something that they have looked into, according to their PR director. So another potential catalyst, which really is why you should invest if you're bullish on this. They have what they called IDE 365. So it's basically when they start, they have the FDA approval to start their clinical trial for their 365. So it's the IDE. FDA basically allows them to start doing trials to start using their 365 device, which would be CGM for the whole year. I asked them about my concern with possible infection and sepsis, due to the device being in your device being inserted. And he told me that there's no concern for this, that this is not a concern for them. So asked them about their recent offering that they had, and they said that they had a recent offering, but they're pretty comfortable with the cash flow that they have now, and they see themselves possibly being profitable in 2025. So those were just some of the brief questions that I asked them, and I was pretty comfortable with what they told me. So again, these are the potential catalysts that we discussed. FDA approval of Eversense XL, which would be 180 days. Eversense 365 IDE clinical trial 2021. And I put no competition because when they get this approved, which they're expecting in 2024, 2025, according to their website, that there will be no competition and nobody's close of having a product like this that would be inserted and only require 5-minute intervention every year to remove and replace the sensor. If the company gets this, then there's just no competition. And I see great things. I mean, if you're a diabetic and you're using Dexcom and you have to replace it every 10 days, that could be a hassle, even though they mail it to you and you do all those things yourself. But this will be inserted once and just once a year, 5-minute intervention. That's the only time you have to replace it. That's definitely a game changer. So just their finances, obviously they're in debt. They're not profitable yet, but they do have 175 million in cash. So they're stating that they can operate with that cash for the next few years. They're expected to be profitable in 2025. And one concern I had, though, is in the last year there's been major individual selling. There hasn't been a lot of institutional selling, and there are institutions that are invested in this. But there's been a couple of major inside sales. So that's always something that you definitely kind of a little bit concerned about. So these are some of the top shareholders. 18%. They have 68 million shares. Robert Smith, he's on management. They have BlackRock, which has only a couple million shares. BlackRock is pretty well known. So that's Timothy Goodnow, and he's the president. He has his shares that he's been holding, and that's always a good sign when the CEO's holding shares. They obviously want the company to grow. And just briefly kind of go through, this is their investor relation presentation. They're saying that the first and only CGM that lasts months versus days. They're talking about Dexcom, implantable sensor, transmitted MRI. Dexcom also is MRI compatible, and it can get wet. So this is what they're waiting for here. They're waiting for the 180-day sensor approval, which hopefully will be happening September, October, and also IDE investigational device exemption should be approved this year. So we talked about them partnering up with Essentia, which is a big positive. Let's see. Another thing that they're excited about, that they're growing reimbursement. They're now being reimbursed for their product. So this is some of the insurance companies. So it's for type 1, type 2 diabetics. This is the timeline. So this is going to be the game changer to me, the 365. I mean, once they get that going in 2023, so I said 2024, so it's actually only a couple years. So this is, to me, there's just nobody doing this. I haven't seen anyone that's come close to having a product where, once a year you only have to get it replaced. This is definitely going to be a big time game changer. And it tells you the population. So in 2024, they have still more things that they want to do, where they have no transmitter, the battery, higher sense battery, alerts. So kind of just giving you an example of how it works. Just kind of scan, and it gives you the reading. And like I said, the 180-day is already used in Europe. So if you look at this chart here, you see that diabetes, how big of a problem it is. So the number of people diagnosed with diabetes in the USA in 2020 was 34.2 million, of which 1.6 million have type 1 diabetes. So it's not a problem that's gone away. They're not going to cure it. So, I mean, obviously, you want to be invested. If there's a company that's looking to cure it, that's even better. But they're at least going to make their lives feel more normal, much more livable, where they don't have to prick themselves after every single meal and adjust their insulin. They don't have to prick themselves several times a day. They just insert this product and scan it whenever they want to get a number, continuous reading, and only replace it once a year. So, there'll be some normalcy, and that's definitely a big perk. So my final conclusion here, and I kind of want to pull up a chart in a minute. So it's extremely high risk, high reward. I am invested in this stock. Buy amount that you're comfortable losing. That's kind of what I wanted to mention. So I want to show you Dexcom's chart here real quick. So this is Dexcom yearly chart. So they started in 2005 here, and when they were a small company, and they've gotten as low as here $1.36, 262 that year. In 2009 they went as low as 262, high as 896. The following year as low as 821, as high as 14. In 2011, 675 was the low, 1691. This is for the whole year. So they continued that way, and then in 2018, $51 to 152. 2019, $107 to 232. 2020, $182 as high as 456. In 2021, as high as 423 and as low as 347. So Senseonics is in this stage here, right? So it might dip more. I mean, it's already really low. So let's go to Senseonics. So you look at Senseonics, they used to trade under $1, and currently trading, this is the daily chart, as low as 311 to 330. So, the risk is if they fail, they drop down below $1. So if you want to just invest, let's say $1,000, and you buy 300 shares, if it drops to $1 or below, probably should just sell, take your $600 loss. So it should be an amount that you're comfortable losing. But this is not a flashy stock. This is not, hey, I buy here today and in 2 months it's, $40. I think this is a stock that's going to have its spikes. It's going to have its drops. But potentially, if it can do what Dexcom does, and, they're pretty confident based on the science, based on, their product in Europe, that they're going to get their FDA approval for the 180-day. And if they get the 365, I don't see why, if you're a diabetic, you would prefer, changing out your product every 10 days, or just going to the doctor once a year for a 5-minute procedure, and that's it. Then that's a 365 at 2023. So it's very high risk, and the risk is whatever you put in, but it's extremely high reward. Just imagine if it can capture half of what Dexcom does, and it starts trading at $200 in the next 5 years, 6 years. It's nice. It'll be a nice savings. So I'm bullish on this stock. I'm telling you, it's a high risk, high reward. Be prepared to um, whatever you put in to lose at least half. If it drops down to $1, but the potential is extremely high. Like I mentioned, their competition, Dexicom, is trading at 430. Abbott and Medtronic's both above 120. So they're gonna, if they're successful, if they get their FDA approval, big ifs, and their partnership with Essentia, which will give them access to 10 million customers, potentially 10 million customers, which will also help them with advertising. Is that company's been around for a long time, and they've mastered their advertising. They're very successful with over $1 billion in revenue. So if all those things go through, I don't see why it's in the next 5 years or after 2023 when they have their 365, why it wouldn't be trading higher than Abbott, why it wouldn't be trading higher than Medtronics, both of which are 125, 120, 130 trading, and maybe even getting close to Dexicom. So that's the potential, and you know your risks. Make sure you do your due diligence. We're just here for education. And please check out some of our other videos where we've had an oncologist and we've interviewed. For this video here, I made sure I called somebody from Senseonics and just got more information. And that's what we like to do when we do our due diligence. Thank you. I hope you enjoyed the video.